What if the next chapter of crypto infrastructure is already live and quietly stitching legacy finance into blockchain settlement, while most investors remain focused on what is loud, not what is working? What if the Layer 2 best aligned for institutional adoption is not chasing consumer transaction speed but precise financial integration? Those rails, the infrastructure for tokenized equities and structured financial products, are already moving forward now. That Layer 2 is Mantle. Let's establish context. We are in 2025. Bitcoin and Ethereum exchange-traded funds are operational. Interest rates in the United States and Europe are beginning to ease. Liquidity is flowing back into markets with caution. Yet this time, capital rotation follows different rules. Institutions are not seeking speculative narratives. They are seeking infrastructure that functions, that integrates, that aligns with policy and financial architecture. And this is where Mantle begins to move into frame. Because here is where it gets interesting. Mantle was first presented as a scalability solution built on Ethereum foundations. But over the past 2 years, it evolved into something larger. A modular Layer 2 engineered to connect traditional financial assets to on-chain liquidity. Industry reports from late 2024 onward indicate growing collaboration with regulated custody providers and infrastructure platforms. Early integration points directly addressed the regulatory execution gap between regulatory requirements and blockchain execution. This next part is where most investors still overlook what's changing. Mantle announced a collaboration with Anchorage Digital, a regulated crypto bank in the United States. That partnership enables institutional custody for Mantle assets on Ethereum. This is not branding, it's infrastructure alignment. It is the beginning of compliance infrastructure linking regulated finance to modular scaling. Here's why that matters. Because when custody aligns with deployment capability, functional capital can move. And this is where things take a turn. Mantle also initiated partnerships with Bakkt Finance and Bybit to facilitate tokenized equity distribution via Mantle rails. Based on Q3 2025 network reports, tokenization pilots for regulated financial instruments are now progressing in controlled on-chain environments. For the first time, Mantle is not simply a scalability tool. It is a bridge. Ethereum 2025 remains central in institutional research as the settlement foundation for tokenization and DeFi architecture. Mantle does not compete with Ethereum. It extends it. Here's where the narrative flips. Most Layer 2s optimize for consumer transaction speed. Mantle optimizes for enterprise interoperability. This one detail changes everything. Its modular data architecture supports isolated execution environments while retaining Ethereum security. This allows financial instruments to be deployed and updated with precision. Not in theory. In controlled environments that institutions can evaluate. Here's the simplest way to look at it. The modular approach is what lets Mantle bridge highly regulated financial frameworks with on-chain programmability, without abandoning Ethereum settlement integrity. Now here is the real unlock. Mantle has begun observing rising involvement from sophisticated allocators. According to the latest ecosystem statistics, liquidity increased following institutional testing periods and tokenization trials. Transaction volumes rose during synthetic product evaluations. This shift marks the inflection point. Smart money is not following hype cycles. It is observing functional rails that match compliance structures. In this context, blockchain infrastructure must be judged on reliability, governance alignment, and upgrade coordination. not solely decentralization metrics. Mantle's architecture enables flexible execution pathways suited for tokenized instruments while maintaining linkage to Ethereum's secure consensus. And this is where the macro intersects. If tokenization of equities, bonds, and alternative assets accelerates through 2025, and if institutional adoption continues beyond derivative exposure toward infrastructure settlement, then networks enabling regulated custody and programmable deployment will hold advantage. Ethereum 2025 will remain the base. Mantle positions itself as an execution layer. Here is where the real story starts. Analysts describe Mantle as operating with the precision of an institutional-grade execution layer while retaining the security of a Layer 2 anchored to Ethereum. Whether this description holds fully depends on execution, but the framing captures the strategic thesis. Now, the counterpoint. Risks exist. First, competition. Other Ethereum-aligned networks are targeting tokenization. Mantle must build distinctive integration advantages rather than rely on narrative momentum. Second, regulation. Global classification frameworks are evolving. If policies shift faster than Mantle adapts, positioning could weaken. Third, developer depth. Mantle's developer ecosystem is expanding, but remains smaller than networks with multi-cycle foundations. Incentive models must sustain engagement to avoid stagnation. That's the pressure point. Now look at the roadmap. Mantle governance reports from 2025 outline continued modular upgrades, extended data availability layers, and deeper integration into financial tooling frameworks. Industry analysis indicates funding will target applications bridging tokenization workflows with on-chain liquidity programs. If that plan holds, Mantle could progressively become a core execution layer linking regulated finance to decentralized settlement infrastructure. Now take a step back. Institutional adoption is accelerating, but cautiously. Liquidity is returning, but selectively. Investors are looking for platforms where compliance and functionality meet. Mantle is evolving within that precise zone. Ethereum 2025 remains the foundational layer. Mantle does not seek to displace it. It seeks to complete it. Because if Ethereum is the root settlement layer of next-generation financial networks, and if tokenized assets must flow through programmable channels before reaching end users, then networks like Mantle become strategic components of the financial stack. Now the picture sharpens. Mantle is not chasing speed as its headline. Its headline is alignment. Alignment with regulatory custodians. Alignment with institutional workflows. Alignment with tokenization workflows. If you value deep research like this, subscribe to Crypto Wayfarer. Mantle is still early in that transition. Risks remain. Execution discipline is crucial. But if real-world assets continue moving on-chain, and if capital seeks platforms with verified custody pathways, then Mantle will be positioned not as a competitor, but as a connector. Infrastructure rarely arrives with noise. Sometimes it arrives with precision. Stay sharp. Stay strategic. And keep wayfaring.